Today we're taking a look at two pharmaceutical companies in desperate need of a turnaround. This is your Market Checkup. So Max, as I just teased, we're going to take a look at these two pharmaceutical stocks. One of them is a generic drug maker, Teva Pharmaceuticals. The other is European big pharma, AstraZeneca. And both of these companies have been in the doldrums. They changed management and they're trying to get the ships righted, get the stocks turned around and headed the right direction. Let's take a look first at how these companies got to where they are and then whether we think a turnaround is possible. So let's start with Teva Pharmaceuticals.
Well, David, what I like to do is just kind of see how they've performed so far in the year. Let's start with Teva, the generic drug maker, and compare it to some of its peers. So Actavis, big generic drug maker, up 60% so far in 2013. Mylan, 30%. Perrigo, up 18%. Teva is up only 2.5%, and it's actually down about 20% in the last 5 years. Now, to figure out what's happening, I think a good place to start is just looking at last quarter's performance. If we compare EPS, came in line with estimates. Revenue came in a little short, but year-over-year sales were about flat. So it seems like things are kind of stable at the company. And if you dig down into specific revenue, Copaxone sales were up 9%. The product topped $1 billion in sales, and Copaxone is the company's branded drug. So it's kind of surprising. Most people identify Teva as totally generic drug maker.
Yeah, the largest generic drug maker.
Well, a fifth of its revenue actually comes from a branded drug for the treatment of multiple sclerosis. That's the injected drug Copaxone. So up 9% really helped to offset some of the losses it experienced in its generic division. Sales were down 8% in the U.S. due to a few different headwinds there.
And I think when you take a look at Copaxone, that's really the dark cloud that's hanging over the company. As you mentioned, it did over $1 billion. It's responsible for a fifth of revenue. I've seen analyst estimates, though, for over 50% of its operating profits because the profitability of a branded drug is so much larger than that of generic drugs, which is really a low-margin, high-volume business model. So losing this drug is going to dramatically impact Teva Pharmaceuticals. And to that end, its patent is unfortunately potentially at risk as soon as May of next year. Sanofi and Momenta are working on a potential generic competitor. So is Mylan. And the FDA had the FDA turned down 4 citizens petitions from Teva about this. Teva is, they were trying to argue that, okay, Copaxone is actually more of a biologic product, less of a small molecule, and so it's going to need all this rigorous testing to prove equivalency and to limit pharmacist substitution, which is really what's going to impact their sales. The FDA said no way, and so Teva is potentially at risk at that, and then they also have new competitors out, oral competitors. Teva filed another citizens petition to block Biogen's Tecfidera from entering the market.
Yeah, and David, I think that's really why investors just aren't very excited about this stock right now. You can look at any valuation multiple you want, and the company's trading at a discount to a lot of its peers. And what you said about Copaxone is exactly correct, and it's what everyone is really worried about. But there's also another competitive threat that we have to address, and that's other drugs in the multiple sclerosis space. One in particular is Tecfidera from Biogen. It hit the market recently. It brought in about $190 million in sales last quarter. But couple that with some of the other drugs that Biogen has out there for multiple sclerosis, including Avonex and Tysabri. And together, these 3 drugs brought in $1.4 billion last quarter. So Biogen is really a force to be reckoned with in the multiple sclerosis space. And going back to Tecfidera, it's an oral drug. You contrast that with Copaxone, which is injected. And you have to wonder, will sales of Copaxone start to decline just because of the way that it's administered?
And, they have, Teva has Laquinimod under late-stage testing. So, hopefully that'll be an oral competitor for them. And if it's successful, it'll be part of Teva's turnaround story. So let's move to the turnaround story. I myself, we've discussed this off camera. I'm very skeptical about Teva's ability to get the ship righted, even though the new CEO was responsible for Bristol Myers Squibb's extremely successful string of pearls acquisition strategy and drug development strategy. So that said, I didn't love the Cephalon acquisition. I think they may have overpaid a bit. They bought it for $6.8 billion. They outbid Valeant, who came in at $5.7 billion. Valeant is the king of making accretive deals, so maybe they overpaid a little. But in the long run, if some of those drugs work out, what's $1 billion? I think the real interesting story is what they're hoping to do with Copaxone, because and why it was such a loss that it looks like their patent is going to run out now in 2014, because right around that time they were hoping to introduce a slightly less or a slightly better dosing. It would be 3 times a week versus once a day, but now there's going to be cheap generics coming out at the same time, and the question is, will patients comfortable with once a day opt for the cheaper version or an equally expensive version that they have to take slightly less?
Yeah. I mean, my opinion is I'm going to sit on the sidelines for now, but I'm closely watching this one just because I'm a big fan of smart CEOs. And I think Teva does have a very capable manager at the helm. You have to look at some of the things they've been doing, like share buybacks and cutting costs to kind of toe the line with their margins. Also, a redeeming quality with the stock is their dividend. So I think a lot of investors are still kind of looking at it and trying to find different qualities. But at the end of the day, what I'm worried about is their growth potential. And I think that really comes down to making a smart acquisition. I really don't see any other way that they can boost their pipeline right now. And their free cash flow is quite strong right now. So what I'd like to see is them to make a very strong acquisition, and then I'll reevaluate my position.
I think the other thing investors are talking about when you're talking about boosting the pipeline is their new therapeutic entity idea, which is, they take 2 branded drugs, maybe they're complementary, or sorry, 2 generic drugs that are complementary in what they do, or maybe one drug offsets a side effect issue with the other drug, and that gives it a better safety profile. You combine these 2 drugs, you claim it's a new branded drug, you get it approved, and then you jack up the price. And this seems clever because this should be right in Teva's wheelhouse, right? They're already producing all these generic drugs to begin with, and that's how you could really easily increase a branded portfolio, and they're looking at quite a few of these products, getting them in development. But I'm really a little concerned about how that's going to fare in the marketplace, because while we've seen these drugs get approved in the past, we've seen a less than warm market reaction to taking 2 drugs that are already available and are sometimes compounded together. Doctors will prescribe them both, and all of a sudden companies come in. There was a drug called Makino, which there was a huge pushback to, and the FDA said they wouldn't actually enforce the patents. They wouldn't stop pharmacists from selling the 2 generics, and that actually caused that company real financial problems. And even though Teva will be really aggressive about, I'm sure, enforcing their patents, I just wonder how successful it'll be, because you just see this huge pricing or pushback from usually the massive pricing increase, 10x, 20x of what it currently was. So while it seems like a real easy win for them, I'm concerned that actually, if you look at history, it could be a little bit more of a Hail Mary pass, and that's just there just seems to be a lot to me. I'm at the bottom line, I'm bearish about Teva, and I need to see a couple more quarters before I would say, okay, investors, this company does look like it's beginning to get its legs under it, even though I do really like their management.
Yeah, and also, David, that's really just part of their strategy. You have to look at other things they're doing, like their own moves in the biosimilar space. That could be potentially very rewarding down the line. But again, I'm sitting on the sidelines. I want to see what happens in the next 12 months.
All right. Well, let's take a look at the British Big Pharma, or I guess it's more than just British.
British-Swedish.
British-Swedish Big Pharma, AstraZeneca, how they got here and its turnaround situation.
Yeah, well, so far, the S&P 500 is up 18% in 2013. AstraZeneca shares are up only about 4%, so another underperformer here in a space that's actually been pretty hot. I mean, basically everything in pharma and biotech has been on a tear lately.
Well, and it's been underperforming for a reason. I have its second quarter results right here. Sales were down 6%. Earnings per share were actually down about 23%, but that was actually in line with what the street expected. So, that's pretty painful. And then you take a look at the drugs they have on sale, and this is where a lot of the concerns come from. Crestor, it's their big seller. It did $1.5 billion in second quarter sales. Its patent expires in 2016, and it was already starting to decline thanks to generic Lipitor being on the market. Then they have Nexium. It did $1 billion in sales. Its patent expires in 2014, as does Symbicort's patent, and that did about $800 million in sales. You combine those 3 products, that's half of AstraZeneca's sales potentially going away by 2016.
Yeah, so actually, David, one problem is looking forward to patent expirations, and the other problem has been AstraZeneca's track record in the last few months in getting new products on the market. And I think
That's how you would offset those patent expirations.
right, but unfortunately, drugs like Forxiga haven't made it, right? So Forxiga, it is approved in the EU, but it was rejected by the FDA in the US. And in the meantime, Johnson & Johnson has gotten a competing product called Invokana on the market. And to make the story more complicated, right? So if Forxiga gets approval when AstraZeneca and his partner Bristol Myers Squibb reapply at the beginning of 2014, it'll go up against Invokana, which doctors have already started to prescribe. They may be more comfortable prescribing at this point, so they've kind of lost their first mover advantage there.
Yeah, and we've seen other pipeline problems as well. I mean, diabetes is a huge market, and there are a lot of competitors there. So's rheumatoid arthritis, and that caused them to just bail on fostamatinib. It really had middling phase 3 trial results, and they just gave the drug back to Rigel. They said this isn't worth developing any further. And then we've seen they had an antidepressant fail in phase 3 trials. They licensed that from Targacept for over $1 billion, $1.2 billion. They ended up having to write off about $450 million, which isn't chump change to anyone. I don't care how big a company you are. So I think that's made a lot of people skeptical of their ability to weather the storm in the short term and turn it around in the longer term. New CEO Pascal Soriot has basically admitted as much. He said it's going to take years to right this ship. Why should investors be excited about a potential turnaround?
Well, for one reason, the company is already starting to make some acquisitions. So it does recognize the problem that their pipeline is a little bit thin. They've had a few management reshuffles. They're also moving their R&D center to, in the EU, it will be Cambridge, which as an alum of Cambridge, I'm glad they didn't go to Oxford. Right? But actually, looking at some of the acquisitions they've made, they recently acquired Amplimmune. So they're getting into the cancer immunotherapy space, which we've seen be very rewarding for companies like Bristol Myers Squibb and Merck. They purchased Omthera, which is developing a fish oil pill that could potentially evergreen Crestor, or at least expand their cardiovascular franchise a little bit. They also purchased...
If it's approved.
If it's approved, and that's a problem, right? So it's still going through late-stage trials, and you never know what the FDA is going to do, especially with all the skepticism around fish oil products right now. And Pearl Therapeutics is another acquisition they've made. So I think they are starting
to... COPD drugs.
Yeah, they're starting to fill up gaps in their pipeline. What I would like to see more of are later stage candidates. But if you're going out acquiring late stage candidates, you're going to get those at a premium.
Yeah, it costs a lot of money.
Yeah, so just because they're going after more drugs, it seems in phase 2, they're trying to get them more cheaply, but it'll take longer to see if they have.
And it's a lot riskier. There's a BACE inhibitor, which is an Alzheimer's drug. They licensed that from Astex Pharmaceuticals. That's in an early stage. It is two knocks against it. One, it's an Alzheimer's drug, and those fail quite often. And then the other is it's an early stage development, so it's hard to value. So it really looks like for AstraZeneca, there is this huge gap that maybe if a lot of these early stage products successfully get through clinical development, which is always a lot easier said than done, the company will be okay. But in the meantime, I'm taking a look at their diabetes franchise. There wasn't much to savor, which is a bit of an inside joke, because that's what the trial was called. From their recent trial for Anglisa, there was no cardiovascular benefit, and the DPP-4 class of diabetes drugs does remain under pressure. There was a decline in prescription growth for Anglisa, and Byetta and Bydureon have been disappointing to date as well. Perhaps Forxiga can turn that around.
But actually, David, I think sales of Anglisa have probably declined because of the strength that Merck has had with Januvia and Janiman. I don't remember the numbers from last quarter, but I recall they were up for Merck. So that's an exciting class to be in. Again, we have to see whether or not Anglisa sales can ramp up. But in the meantime, it's January 11th. That's when the FDA will make its decision on Forxiga.
Yep.
AstraZeneca shareholders should really pay attention not only to the approval, but if it does get approval, to the commercial launch, and they should definitely be tracking those numbers. It seems to me like one of their biggest opportunities in the near term.
Yeah, I think the other thing I'm looking for in the near term would be Brilinta, which is a blood thinner. This competes with Bristol Myers Plavix and Eli Lilly's Effient. Now, it beat Plavix in comparative trials, but the question is, can it compete with generic Plavix, which is, decimated Bristol Myers Squibb sales? I think they were down, over 90%, 94% in the most recent quarter. So that's the real question. It was up 261% for the quarter, so yay. But it came in to about $65 million, so that's not really going to move the needle. But potentially it could. I mean, that's a big market if doctors choose efficacy over cost. We'll see what happens there. I think the other thing to look at is whether some of their immuno-oncology assets from MedImmune starts to gain traction. That was a widely panned purchase. Perhaps in the long run, AstraZeneca will be proven right, but we'll see what happens as well. I have some concerns though over their financials in the immediate term, including their dividend. You take a look at the payout ratio. It has really been creeping up. I mean, just a couple years ago, it was at 39% in 2011, 58% in 2012, and it's up over 70% now.
Yeah, and also their free cash flow has been declining. So again, that reduces their firepower to make an acquisition. So, I mean, me personally, I'm on the sidelines with this one too. It doesn't really fit with my investment style and my portfolio right now. But turnaround stories can be exciting if they go your way. For me, there are just too many question marks right now.
Yeah, I would stay away from AstraZeneca as well, although I'm not nearly as bearish on it as I am about Teva, because I actually think, it's got a pretty robust early stage pipeline. Some of those will pan out. Now, shares may fall considerably further, so I wouldn't jump in, but I do think AstraZeneca isn't going away. It's a company that will get the ship righted. Eventually, I just don't know what the company is going to look like when they do. So I think both these companies are stocks that investors should watch, but stay a good safe distance away
from.
Well,
it'll definitely be an exciting story to see what happens, and I think we're going to learn a lot as investors in this space just by watching what happens in the next year or so.
Absolutely. Thanks, Max. And for Max Macaluso, I'm David Williamson. Thanks for watching Market Checkup, and stay tuned to Fool.com for all your healthcare news. Fool on.